HMRC just gave every UK driver a 22% pay rise on business mileage. The approved rate jumped from 45 pence to 55 pence a mile, backdated to the 6th of April, 2026, and here's exactly what that means for your next claim. That 55 pence rate only applies to your first 10,000 business miles in the tax year. Every mile after that drops to 25 pence, so keep track of your running total once you cross that line. This single flat rate is designed to cover fuel, insurance, servicing, and general wear and tear all in one figure, so you don't need to keep separate receipts for each individual cost. Not every journey qualifies. Visiting clients, traveling between offices, or driving to a temporary workplace all count as business mileage, but your normal daily commute to a permanent workplace does not. Here's the catch on temporary workplaces. If you spend more than 40% of your time there, or you're likely to be there for more than 24 months, HMRC reclassifies it as permanent, and your mileage claim stops. Here's what that looks like in real money. 12,000 business miles this year works out to £6,000 tax-free, up from just 5,000 under the old 45 pence rate. Carrying a colleague on a business trip. You can claim an extra 5 pence per mile, per passenger, on top of your normal rate, a benefit almost nobody actually claims. Ride a motorcycle for work instead. That's 24 pence per mile. Cycling counts too, at 20 pence per mile, and neither one has a 10,000 mile threshold to worry about. If your employer pays you less than the approved rate, you're not simply out of pocket. You can claim mileage allowance relief on the difference through a P87 form or your self-assessment. Pay more than the approved rate, and that extra amount becomes a taxable benefit that has to be reported. So it's worth checking your payslip actually matches HMRC's current figures. If your business is VAT registered, there's another angle. You can reclaim input VAT on the fuel element hidden inside your mileage payments, as long as you're holding valid VAT fuel receipts. Self-employed. You can use these flat mileage rates instead of tracking every actual vehicle cost, but once you choose that method for a car, you're stuck with it for as long as you use it. Drive your own electric car for business. There's no separate rate for you. HMRC applies the exact same 55 pence and 25 pence rates as petrol or diesel vehicles. It's only different for company-owned electric cars, where HMRC uses a separate advisory electricity rate, 7 pence per mile charging at home, 15 pence for public chargers. Company petrol or diesel car instead. That runs on a totally different set of advisory fuel rates, based on engine size, reviewed every quarter, nothing to do with the 55 pence figure at all. And if your employer offers so-called free fuel for personal use, be careful, it's actually a taxable benefit, and it can cost more than simply paying for your own petrol. To make any of this valid, HMRC expects a proper log for every trip, the date, the destination, the business purpose, and the exact mileage driven. Keep those records for at least 5 years after you submit your return, because if HMRC ever opens an inquiry, your mileage log is usually the first thing they ask for. You claim through a P87 form if you're employed, or through your self-assessment return if you're self-employed. Get it right, and you could be claiming a lot more than you think.